After some serious pullback, we saw a nice rally today. But why did we see a nice rally? Oil was up big. Oil starting to recover, at least the June contracts. They were down aggressively, then pulled back up somewhat aggressively. Still very cheap. But if you ask me, I don't like following oil for my positions. I don't think oil should be dictating the market like it is. But really, the market's just moving on momentum right now. The pullback that I've been talking about, it's momentum. Why? Because there was a lot of upward momentum. It was getting a little too hot. So then we got some downward momentum. I don't make decisions on momentum. I make decisions on fundamentals. And we got some pretty good fundamentals. Snapchat came out yesterday, some pretty good fundamentals. Monetizing well on users, $2 per user. So add that up on how many Snapchat users. Pretty good. In the context of social media networks, Facebook's is around 7. So Snapchat's still not doing it as well as Facebook, but they beat on revenue expectations, over 400 million. I think it was 460 million instead of 425 million. Slightly less earnings per share, so they had, higher expenses, some sort. So it is what it is. They missed out by 1 cent. Not that big of a deal. The stock still rallied very aggressively today. But that should kind of spill over into how we look into the market. Those are the kinds of things I want to look at. I don't want to look at an oil rally, rallying the rest of the market. I want to look here. Listen to Evan Spiegel today, CEO of Snapchat. He said that a lot of packaged goods are selling very well. For example, Dove, soap, shampoo company. They're taking advantage of the underpriced ads right now, and they're hitting what I assume are record sales. A lot of people staying home, more interested in the shower because they're bored, even though normally they would need to go out and shower because they need to be clean in public, but somehow people are doing those kinds of things more often. Maybe I'm making that assumption. We obviously don't know. We just don't know. Procter Gamble's been, Procter Gamble, large company conglomerate that owns a lot of companies, packaged goods, products, been doing pretty well. Walmart, a company that sells lots of packaged goods, products, doing very well. So kind of the backbone products have been doing well, and that kind of spending hasn't gone away. Now, that leads us into the economic debate of what is considered autonomous consumption. What are the needs of the basic person? What are they going to spend on? What are they not going to spend on? A lot of things to consider here. But we got to see that people aren't really pulling back from that kind of spending. They're still spending there. And I've been seeing people spend on Yeezy shoes. I bought a pair of Yeezy shoes that's gone up the past 2 weeks. But most importantly, where are we getting our cues from? Where are we getting this information from? Who's ahead of us? You know who's ahead of us? China's ahead of us. So why did I talk about Yeezy? Nike, American company, only saw 4% sales decline in China. I don't know about you, but I'm not buying shoes right now. At least I wouldn't be thinking about buying shoes. But somehow, that's how the economy is working. So we were coming out of a good economy. It's been going on. Coronavirus has been going on for a month and a half, 2 months. It is what it is. People have gotten furloughed and fired aggressively in the past couple weeks. But some people still have money, and some people seem to be spending it. And it seems like there is certainly economic damage. I'm not saying that there's not going to be a recession, but it's not catastrophic. It's damage, though. It's not catastrophic damage. So I'm not fearful, but I'm acknowledging that there is some damage done, and that leads me to want to just hold. I'm going to be buying on pullbacks. I'm still going to be nibbling on good positions. So today I heard a ex-employee, very early employee in Facebook, I can't pronounce his whole name. He came out and said bad things about hedge fund managers and stuff, and I agree with this point, honestly. CEOs got to be better at capital allocation. You can't just be buying back stock with no safety fund. That's, to the detriment of the airlines right now. But he was very involved and is still very involved in Virgin Galactic. And he said something I was suspicious of for a long time, that Virgin Galactic would try to revolutionize the airplane. They're taking people to not deep space, not like to the moon. They're taking people to the upper atmosphere, to zero gravity kind of space in a rocket ship that looks kind of more like a plane than a rocket ship. It's plane design, almost like jet engine, F-35 design with rocket engines. And he's saying and it lands and takes off like a plane. And he's saying that's going to be able to get people from LA to Tokyo in 45 minutes. Fuck yeah, I'm going to nibble on that shit. I don't care what price it's at, honestly. I'll just buy a little bit. I hope it's going to fall down. Well, I care what price it's at, but it's a good price right now. $3 billion valuation on the company. Divide that by outstanding shares, that's your price. So I nibbled on it a little bit today just because I wanted to beef up that position. I'm going to beef up that position if it continues to fall. As for the market, it's momentum driven right now. Fundamentals are somewhat unknown. I started this trying to be like, we kind of know Nike, China sales, but fundamentals are still unknown. We've gotten some insights on what fundamentals could look like. We're going to see those develop over the next 2-ish weeks as companies start to report earnings, start to get on conference calls, CEOs start to talk and tell us what they're seeing in their companies and their industries and with their customers. And we'll go from there and see what happens. So we are going to await the information. We are going to hold, and if we dip, we're going to buy because prices are still somewhat good. We're playing the long game, trying to buy at these levels that are relatively low, and we will recover from, and we do see the light at the end of the tunnel of, and we will sell when the time is right. But right now, it's a buyer's market right now. It might not be a buyer's moment. We're on a rally. It's still feels a little too hot, but it could be we're flattening out and we're going to chill. And if we start to flatten out, I'm going to start buying again because, then it's going to be good news coming out. It's going to be states opening up. It's going to be people going back out. It's going to be summer. It's going to be 2020 optimism. It's going to be peace with China. It's going to be China trade deal, them buying stuff from us. Lots of good news on the horizon. But, that was kind of what led me to believe the coronavirus downturn on that first January 27th video was we got the USMCA, we got the US-China trade deal. Now we got this coronavirus brewing in China. It's bad news. We got all the good news. So we'll see how things go. And until tomorrow, until the future, peace.